Hello, everybody. Thank you for joining the panel Emerging Data Center Markets and Investment Trends. We're going to talk today about the data center opportunities in the emerging markets. And we will definitely touch also the flat markets, of course. And we're going to talk about some investment trends in this data center market. We have a nice panel lined up today. To introduce you quickly to them, it is Arnoud from NIBC, Mark Chester from Eversheds. We have Nigel from Stratis and Peter Lambrecht from Vertiv. I would like to start to introduce our panelists to briefly explain their role a bit and their respective companies. And if I can start from left to right from my side, I will start with Arnoud. Arnoud, if you can start with explaining.
Yeah, sure. And thanks, Frank. And good afternoon also to the digital audience. Way different compared to last year, but still very nice to be here. My name is Arnoud. I'm part of the digital infrastructure team at NIBC. NIBC is a mid-sized entrepreneurial bank with a focus on Northwestern Europe. And within our corporate bank, we have focused on certain subsectors, and one of them is especially digital infrastructure. Actually, since foundation of the bank in 1945, infrastructure always has been a core sector. And over the last almost 10 years, we now really have been focusing also on digital infrastructure. We are financing data centers, both in the operational and in the construction phase, as well as fiber networks. And we do that in the Benelux, UK, DACH region, and the Nordics. And within that team, I'm responsible for the Nordics and the DACH region. So looking forward to share some insights on that region on the financing side with you today.
Thank you, Arnoud. Nigel, you are next on my list in my screen, so maybe you can start.
Okay, yeah, I'm Nigel Clarkson, co-founder of Stratis Data Centers. We have a European and Asian-based platform, very different to most in that we're a data center developer. So we don't operate, provide facilities management, hands-on management of the actual infrastructure itself. We are a pure play data center developer. So we identify land and or buildings, bring them to market, and then have occupiers actually lease that space from us.
Thank you, Nigel. Peter, you were next from my side.
Yes, good afternoon, Peter Lambrecht. I'm the VP Sales for EMEA for all colocation, cloud, and telco business. Vertiv is a company. We provide critical infrastructure to data centers and to all critical applications, actually. And that can go from single components, whether we talk UPS or cooling units, into complete modular data centers that we deploy more and more all over the globe. So if you don't know Vertiv in the data center world, you'd probably be looking for a different job.
Yeah. Well, that's the great statement to start with. Okay, then last but not least, Mark, can I ask you to go?
Of course, thanks, Frank, and I'm delighted to be on the panel here with you all today. So I'm Mark Chester. I'm a partner at the law firm Eversheds, Sutherland. I co-lead the firm's global data centers practice, and we're involved in projects at all stages of the DC life cycle, from inception through to sale, as much as on the developer operator side as we are on the end user side, including acting for some of the hyperscalers. And we do this type of work across more than 24 of the 34 or so jurisdictions in which, as a business, we now have offices. So hopefully, over the next 40 minutes or so, I'll at least be in a position to provide some balance and insight from both sides of the fence.
Okay.
Thanks, Frank.
Perfect. Thank you very much. Well, before we start with the topic of today's panel, we cannot avoid talking about the biggest impact currently in our market, COVID-19. This unprecedented health crisis has changed our way of business. Let's face it, we are now looking at a screen to do our business, and we were just talking about it, that we are normally having a beer and bitter balls and doing our business that way. So I would like to ask you a few questions about the COVID-19 before we continue in our topics. Mark, can I start with you? Mark, what do you believe will be the impact on the pandemic in the growth of the European data center market, and what has it been affecting the growth for the last 12 months?
Well, from our perspective, it feels as though COVID has triggered a huge uptick in activity in the DC sector. In one of the sessions I was listening to this morning, I heard somebody refer to it as an accelerator for the data center sector, particularly over those last 11 months. And I think in that period, things have been characterized by sort of three real phases from a DC perspective, particularly as an advisor into the sector. First was inevitably dealing with the sort of immediate impact of COVID, dealing with delays on projects, ensuring the uninterrupted movement of plant and equipment across Europe as movement became more restricted and issues like that. I think that what very quickly followed that was what felt like an absolute frenzied drawdown of every scrap of available data center co-location space that we could lay our hands on in Europe. And we saw that in particular happening with the hyperscalers, as that global demand for digital infrastructure and in particular cloud services jumped almost overnight. And many of you will have seen, I can't remember the exact stat now, but I think it was either Q3 or Q4 last year. I think Microsoft reported that they'd seen a sort of 750+% leap in cloud services across the regions where social distancing was in place. I think the third phase now, and perhaps an inevitable consequence of that second, is that we're seeing an unprecedented level of site acquisitions for the development of new data centers at the moment. And this is both for the data center developer operators and for the hyperscaler end users of them. And that's not just in the flat D locations, but also in new markets, some of which were entirely new to us. Yeah. But I guess that's a topic we're going to come on to in a little while anyway.
Absolutely. Yeah, I also see a huge trend of the need for more capacity and a huge growth during the COVID times. But Nigel, maybe I can ask you, I mean, we see this growth happening now. What do you think will happen past COVID-19? Are we ending up with empty data centers, or is this a trend that will continue?
No, from our perspective, we've seen that COVID-19 has solidified digital infrastructure as a core investment. What, of course, people used to look at as data centers as alternatives are now very much, core defensible. But, going back to what Mark said, he'd actually stole one of my statistics. I was going to say, Microsoft says that it's 775% increase in their Teams calling and meeting cloud facilities. And we've seen that not only in Europe, but Asia particularly, which, if you look at, of course, the last area of major investment, which is supposedly going to outstrip Europe and both South and North America, the demand is just enormous. There's a massive, what we call space race for land and opportunities, not just short term, but people are talking about 2023, 2024 and onwards. So we certainly have not seen from a development perspective any let up in requirements, that's for sure.
Okay. So
what we are also seeing is that people start really booking capacity in our plants to ensure that they will have equipment coming out in the next 12, 24 months. And this is a completely new trend. This makes me think, for the ones that were around in the internet bubble, where everything was about availability and what have you, we're seeing something of that actually coming back. Yeah. People start booking capacity, make sure that they have their hands on production slots. So it is not going to stop in July 21. That's for sure.
Yeah. And would you see any other downsides coming from the COVID, besides, of course, the personal situation for folks, but also, for example, like it's difficult to get folks to the site to do site surveys, to builders and that kind of stuff?
Yeah, I mean, we have seen a bit of that, particularly in the context of ongoing construction projects, where inevitably things move very quickly in terms of government regulations and restrictions around lockdowns, etc., etc. You would have seen it a week or so ago in Dublin when increasingly tight restrictions were imposed, and there was a in Ireland generally, and there was a concern around whether that meant that ongoing data center projects would need to grind to a halt. And inevitably, with regulation coming out so fast, it can't possibly cover every single nuance and every single sector within it. So that inevitably there's that kind of impact of short-term uncertainty associated with what is an ever-changing regulatory backdrop to which we're doing these projects.
Yeah.
I was just going to add to that, in that, as a developer, our supply chain is, paramount, and making sure that they have availability. And when we're going through tender processes, particularly on the contractor side, we're asking some very intimate questions as to, workforce, what's your supply chain look like? Do you envisage any problems? Because, of course, those problems potentially can cause us issues with, of course, our end users if we don't deliver on time.
Yeah, you're right. And back to backing this stuff with the end user contract and with the type of structures Nigel is talking about is clearly a huge problem.
What we also have seen as a trend is that people are asking more prefab modules, so that the on-site building and construction phase can be really shortened with less people on site.
Yeah.
So
and presumably, Peter, to bring more certainty to the process.
Yeah, absolutely. Yeah, so we have seen that also in the last 12 months really coming through. Yeah, a lot more people going into building blocks coming out of a plant.
Arnoud, I'm now touching to you a bit, because how has the financing market for the digital infrastructure reacted on the COVID-19? And do you see any difference in the first wave compared to the second wave?
Yeah, I think we definitely see. I think in March last year, we have seen sort of a full stop. So everybody was focusing on their existing portfolio, what's really happening, what is the impact on our clients, and then not only on the digital infrastructure clients, but also in a broader sense of the bank. So shipping, offshore energy, leverage finance related clients, to really assess what is ongoing and have a certain hold and stop for the moment. I think we've seen that across a lot of banks and investors, but things turned quite swiftly back to, say, investment mode and financing mode. I think for us, we reopened again in May already, after seeing how resilient the digital infrastructure space is and how important it was and now even more is these days with the working from home and the new setup. So I think that is a real positive and an acknowledgement towards the sector, how important it is, and that is also seen in the financing market. I think if you compare it with the second wave or maybe third wave we're in right now, I think everybody is used to this new setup. So I think also the reaction in the financing market was less compared to the Q1 stop of investments, and maybe it's now actually the opposite, that people acknowledge how important it is, and there's even more investment and lending appetite compared to say last year.
Okay, perfect. Well, let's we talk enough about COVID. I'm getting everybody wants to get rid of the COVID, so let's move to the topics at hand. I forgot to say, by the way, that if you have questions, please feel free to put it in the comment side, and then we can ask the panelists to answer them. Let's move then to the emerging markets. Of course, the flap markets, or some say flap D markets, have dominated the colocation and the data center market for years in Europe. But we shouldn't downplay the rest of the European market, which is huge. Maybe I can address my first question to Nigel. Do you see a trend at the moment that we are pulling away from the flap markets and towards other markets in Europe? And if so, what do you think is driving that?
Well, I wouldn't say that there's been a shift in investment, because I think the D flap markets or flap D markets will always have and always will be core markets for everyone, both from end users, hyperscale groups, cloud groups, and developers like ourselves. But we too are looking at new markets, not only Europe but also Asia. And new markets, what I would classify as secondary locations in terms of population and cloud take-up. And those markets incorporate, Zurich, the Nordic countries, Eastern Europe, Poland, Warsaw, etc. We're looking at Lisbon, for an example, as a potential alternative to Madrid based on subsea cables coming into Lisbon. So I see that it's not only, yes, investment into the core markets, and as I said, you're always going to get that, but I think people are saying, well, where are people not looking? And I know, of course, this is a European platform, but looking at our Asian products, we're looking at Vietnam, Philippines, Taiwan, where no one's really looking. And that's what we're doing. We're trying to look at locations that others really aren't focused on. So I feel that it's not a case of diverting money. It's just new locations that are being looked at in, secondary markets.
Yeah.
I agree. I see this as being in addition.
It's an addition,
to if we look at our workflow, it is still dominated by flat D, but I suppose what we're seeing is that kind of flow of new site acquisitions in new markets, and that's particularly been a feature of the last 12 months or so. And I guess for the clients that we're working with, that's generally those clients wanting to follow where they think the customer demand is, the hyperscaler demand. I mean, it's
I always say that
statement of the obvious, isn't it, really?
Yeah, I always say that they follow the GDP.
Yeah.
I would like to call it like the first level of edge. Yeah. Where you have flap D, and then this is like the first step out for all the big boys where they're going. And Nigel was giving the examples, and we can add multiple also in Africa and what have you, and in the Middle East. They're creating this first ring of edge. Yeah, because depending on who you talk to, some people say edge is a 150 kilowatt data center, and some people say it's a 5-6 megawatt. Yeah, so it all depends who you talk to. So for me, I believe these, we shouldn't call them emerging markets. Yeah, we should call them the second wave or second tier. And that's, for me, the first level of edge that we're creating. And then we will go further into these markets and deeper into it.
Now, Peter, actually, that's a good remark. But what I was wondering, maybe you can shed your ideas about this. When the edge, when we talk about the secondary markets, it's always Italy or Spain. But Eastern Europe, is that not more an edge for us?
Yes, definitely. Yeah, we see quite some activity happening. Nigel was citing Poland. There is definitely one. We see things happening in Bulgaria. Yeah, Vienna has historically been like a gateway into Eastern Europe. So Vienna is developing, and then of course Southern Europe. We talked about Turkey. We see activity happen. So there is. Yeah, I would call it this ring. And then you have also people, when we go a little bit more to the Nordics, where say, okay, some people are not ready to go into Russia, for example. Yeah, so they try to get as close as possible to Russia, right? Although I think Moscow is a great place to go to and develop. Yeah. So where you have the pots of population, that's where these things will go to, one way or another. Definitely.
Okay, great. Arnoud, I would definitely like your opinion about this, because this morning I found it very interesting when I listened to Penny. She said we are not only about secondary countries, but we talk also about secondary cities. For example, Berlin in Germany and Manchester in the UK. So what is your view of moving to tier 2 markets?
No, I think that's definitely a movement. We see also clients we are financing that they are moving out from the classic flap D market, but still stay within sort of the countries. So indeed to Berlin, Munich, Hamburg, for instance, in Germany. And another key area which we think is getting more and more attention are the Nordics, especially around the Stockholm area, where we do see more investments in financings, and Oslo area as well. And I think it's a topic we will discuss later, but especially the green angle there and the sustainable energy is a big plus. But I think we see on the financing side indeed that companies are expanding, but within their country scope, so to say.
Yeah.
I think, and nobody mentioned the words yet, so latency will definitely be one of the critical elements that people will look at. Yeah, I'm not convinced that putting a data center in Manchester is really of great use when you can have 10 millisecond connections from London to Manchester. Yeah, although you guys, the bankers and the developers, probably you will tell me, well, land is a lot cheaper in Manchester than it is in London, probably. So that might be a good reason to do it the other way around. Yeah. Mm-hmm. So I think that will be more an impacting factor that we will see.
Okay.
Can I just ask Mark a quick question in that, because of these new locations, are there legal issues that you have relating to, we can't get title on locations and things like that cause problems?
Yeah, it does vary from one jurisdiction to the next. And I suppose the biggest difference, if you think about the kind of legal life cycle, buying sites, developing them, procuring power, dealing with your zoning, doing your all-important contracts with the customers, sticking in finance, and then exit. The bit of that process that is more different from one jurisdiction to the next is the buying the land bit. But fundamentally, you've got two systems in Europe, a common law system and a civil law system. And even within the civil law systems, it's not that different from one jurisdiction to another. There are different types of leasehold interests that you can acquire within different jurisdictions. But to be honest with you, once you've done a few of them, they're all very similar to each other. But it's the one bit, obviously working in a firm like Eversheds, it's the one bit where I absolutely need those folks who are based locally to do that part of the
work
project. Yep. You come to the customer contract bit, whether you're on hyperscaler paper or data center operator's own paper, those contracts look almost exactly the same from one jurisdiction to the next.
To another, yeah.
Which is great. So from a customer experience perspective, they're doing fundamentally the same deal in each jurisdiction, irrespective of the backdrop.
Yep.
Okay. Well, I have a statement that I want to bounce off of you all and just get your comments on it, because in the Netherlands it's pretty hot at the moment. There are comics and they're making a lot of fuss about the huge data centers that are being built, and they claim it is a burden on the environment, it is horizon pollution, and they take a lot of the green energy. Do you think that the traditional markets have actually no place anymore for these huge hyperscale campuses, and that we are forced to move to places where there is available land and where there is maybe green energy and all that kind of stuff?
Well, I'll put my hand up.
Go ahead.
To begin with.
Thank you.
Well, I wouldn't say yes to that question. What I would say is that I think again, I'm talking from a developer point of view, we're looking at different alternatives. And if I can use the two examples, a London site, we are plugging into a waste-to-energy plant. Now, of course, people say, well, hold on, you're burning waste. Yeah, well, what would you prefer it to do? Go in landfill or burn it? So, it is greener than, of course, putting it into dumping it. But that is giving us cheap power. If we look at our Frankfurt site, again, we're using a waste-to-energy plant with a biomass plant together with a gas turbine, and that gas turbine is actually a hydrogen ethanol mix. So actually, from a CO2 point of view, it's putting out less CO2. So us as developers are trying to identify locations in all markets where we can plug into something that is greener. And also, I think recently on a podcast, I mentioned my simple version of free air cooling. I open the window, which I was shot down by a few engineers saying it's not that simple. But we're trying to, of course, utilize the outside air that's cooler. So that's what we're doing from a development point of view.
So
It is definitely not as simple as opening the window.
No, I know that.
But something else, by moving the data centers, we're not solving the problem, right?
Yeah, I was going to say.
Like shipping all the old trucks that are very polluting, ship them to Africa, right? And we will buy the Euro 6 ones in Europe and have cleaner environment. So moving them around doesn't solve the problem. Yeah, solving the problem will be, yes, how do we recover waste? How do we make systems more efficient and what have you? But that's a completely different discussion, I would say.
Yeah, and there is a bit of a disconnect here between, we don't want the data centers on our doorstep gobbling up all the power that would otherwise be made available for, new homes or other types of development. But on the other hand, we desperately need the digital infrastructure that underpins our digital economies. And, it's nice to think that the two are completely unrelated, but they're not.
Yeah.
I mean, I think sustainability will be a defining issue, not only for the data center sector, but for all sectors over the next few decades. And in particular, as we come out of COVID, this notion of, doing so in the sense of a green recovery. I think data centers have got an opportunity, if we seize it now, to be central to that, particularly in terms of their carbon, water, and waste strategies. And so some of that will drive us to locations where we can, hopefully achieve rather more sustainable goals. I think we're going to have no choice but to do that because of the scary stats that keep getting bandied around about data centers, accounting for 20% of the world's electricity consumption. And what is it? Nigel's probably better on the stats than I. It's 5 or 6%.
5 or 6% globally, and we're worse than the airline industry and the shipping industry. Yeah.
Arnoud, you must have an opinion about this being Dutch and aware of what is happening.
No, I was indeed referring, and I think Lubach, where you're referring to, he I think around 3 million people watch his show either live or on YouTube. So I think it is a very important element to be aware of the public opinion, and in my view, it is changing. Or at least more people are getting aware of it in the Netherlands. So I think it is important for us as industry to really link it to sustainability and stress the importance over and over again to get it across to say the general public and not have that opinion shifted in the wrong direction. On the other hand, I think on the financing side, there is still, as we've seen also this year for the large hyperscale data centers, a lot of appetite both on the institutional investor side as on the lending side. So I don't think on the financial side that it is an urge to move out of the general markets, but I think we have to be aware of the public opinion and take that into account.
Okay, so my general idea is not all the hyperscalers will suddenly pack up their stuff and move to the Nordics or Iceland or whatever.
If I may add one thing, Frank, to this, I think we as an industry have to do a little bit better our job of communicating what we actually do. A lot of people, when they say the word data center, they have no clue what they're actually talking about and what we as an industry are supporting. If we would say, okay, we will shut down half of our data centers tomorrow, and half of the services that you're currently using will no longer be available, then they might probably start thinking of what we're actually supporting as an industry. We have in general not been great in explaining to the world what is the role of a data center in the whole digital infrastructure. And I think a bit of education there would be very, very welcome.
That is very well said, and indeed the clip what Arnoud was referring to from Lubach is actually stored on a YouTube server and has been watched millions of times. So some education from the population would be good. That moves me maybe to the next point. Education not only from the population but also education from the investors, because what I see is that the institutional investors, they have difficulties understanding actually what data centers are in the data center class, and they struggle a bit between the difference between being a real estate owner and being an operator who's running the business, and especially between the service levels between the two. Maybe Nigel, I mean, I'm Dutch, so I'm blunt. Do you think Yeah. Do you think there is a huge influx of dumb money coming into the market and is ruining the whole market with pricing?
Well, what I was going to start with is in terms of dumb money. If they've got money, they can't be that dumb. So I was going to reclassify it as uneducated money. And I agree, and I'm sure Mark has seen the same, and Arnoud has seen the same in terms of the amount of investment that is pouring into the market, not only here in Europe but also in Asia, as we've seen. But if I can just use one very quick example of that uneducated money, we saw a private equity group buy I think it was about a 16-acre piece of land in West London. They bought it for 9 million. It was probably only worth 7, but they wanted to outbid everyone. But then when they sort of scratched the surface and worked out that the National Grid substation needed 5 years to upgrade the transformers, so they've bought this site for 2-3 million an acre over and above what it should be, and they can't get any power to it. What it causes us as developers is that now every single owner around that area thinks their value is 9 million, and it causes us problems in terms of, we'll see what excuse my language, the dumb money has done, is that they've outbid themselves, and now that's what the market expects. So unfortunately, what we're finding with the money that is being invested, fortunately there are very well-educated groups, KKR and Goldman Sachs and others who've done it before and doing it again. But as I said, it's groups that haven't done it before. And I've got to get in the data center market. How do I do it? Oh, let's just go buy a property, and that's how I get in it. So that's sort of our thoughts. But that they are called more uneducated rather than, I think, dumb money.
My Dutch way of expressing.
Yeah. No, I understand that.
Peter, would you like to chime in on this one and maybe see what you see in your market, your environment?
I think it's exactly the same. Yeah, we see people coming into the industry that have sometimes very little experience in what it's all about. Yeah, it's completely different doing a real estate development than all of a sudden start running data centers. Right, or operating them. Yeah. So yes, I would call them cowboys. Yeah, people that Jesus Christ. Here in this market we can make 10%. So let's go after that. Yeah. So that's yes, we see that. Yeah.
I mean, it is getting back to, I don't know if you remember the old days back in the late 90s, 2000s, and if you had an industrial shed, it becomes a data center, and there's a little bit of that again coming back into hey, I've got this shed, I'll get some power to it, call it a data center. Well, we all know that's, it's not the case, in better words. So.
Yeah, I mean, I've lost count of the number of those types of unsolicited calls that you get. Saying, or can you introduce us to a data center developer operator or a hyperscaler? I've got this lovely bit of land with a nice power supply.
Yeah.
I think on a slightly more serious note, from a funder perspective, that obviously there is a pressure of cash there looking to find a home. And there are sectors, other real estate core sectors that are in the doldrums. So inevitably sectors like data centers have very much moved up people's radar. And there is it's all of our job to help educate the people that we come into contact and work with about what the risks are associated with data center development. And Peter's point is spot on. There's oftentimes a bit of a disconnect between the understanding about the risks associated with simply acquiring a site and funding a development, but then the operational risk piece. And that's why, it's not something you can just go and outsource to an FM provider. You are not going to be able to back the kind of responsibilities and service levels that you have with a customer out to some FM provider. Because quite frankly, if you could, the FM providers would all be borrowing the money to go and develop the data centers themselves. And I suppose what I've seen over the last 15 years or so is that you might have that kind of conversation with a lender way back when, and they say, okay, that risk is not for us, and you never see them again. Whereas now there is much smarter money, particularly infrastructure fund money, that does understand the risks associated, that there will be risks associated with developing in this, because they've been investing in other asset classes that aren't those core real estate, and they're used to managing and dealing with those risks.
Yeah.
I think that's a fair comment you make, Mark, and that's what we see as well, that a lot of infrastructure funds are really moving into the digital infrastructure space, both fiber financings and data center financing. Also driven by the fact that a lot of governments see this as core infrastructure going forward, and it ticks to one of the boxes for their investment committees and investment strategies. So I think it's definitely something we see as well.
Yeah. Yeah, you see also that at this moment that these typical developer and operators, like the data center REITs, are moving in this build-to-suit or powered shell space arena. Do they have is that their market, or do you see it shift in changing the direction of these parties?
Well, I think go for a minute.
No, so I was going to say, I think we're already seeing BTS type deals. I mean, the reality is that the developer operators are often quicker at identifying sites for data center development and securing the permits and then constructing the buildings. But I think we're seeing a second market alongside colo here, because there's an opportunity for those developer operators to deliver a kind of BTS triple net based lease product that can either, if they're a REIT, sit happily in the REIT, or if and particularly where there's an operational element to it, or if there's no operational element, they can sell it on to Nigel's educated money, stick it in an annuity fund, or it might even be forward purchase by a fund like that. But even if there's an operational element, we're increasingly seeing a sort of critical services FM plus type arrangement sitting alongside the triple net lease, where the developer operator continues to operate the asset for a period of time. So I think it's, from our perspective, this is great. It's just creating another marketplace within the data center sector. I think this sits quite happily alongside colo, and the scale of these BTS style deals is considerably larger than the colo projects that we've been customarily handling.
I mean, I think there's an illusion in that, the Amazons, Microsofts, Googles of the world have massive teams flying around the world identifying locations. I can tell you now that is not the case. There's one guy that handles the whole of Asia, for example, for one of those groups. How the hell he actually does his job, I don't know. And from our perspective, or their perspective, they actually see us as resource augmentation, because we are out there every single day of the week looking at sites, looking at opportunities. Does that work? Does this work? So from them, as Mark said, we are getting a lot of traction on build to suits, because of course we're potentially 9 to 12 months in front of them if they started a search in Vietnam. We've been looking in Vietnam nearly for 12 months now. And therefore, hold on, we can get quicker in Vietnam if we go down the build-to-suit route. Yeah. And I'm using Vietnam as one example. So,
well, let's take it closer at home when you see these build-to-suits happening in the flat markets.
Well, they are.
Yeah.
But the other thing I think, sorry, just Frank, just really quickly, in that the problem also with some of those groups, those build-to-suits are very particular in terms of structure of them. One of the hyperscale groups has a 2-story structure. Well, you can do that in Idaho or wherever it is in the States where you can buy 50, 100 acres of land. You can't do that in the guts of Frankfurt where you can get possibly 20 acres of land. You can't have a building that's 150 meters long with 2 stories. It doesn't make sense from a land value point of view.
Yeah. Okay, guys, in a matter of time, we still have 5 minutes left. I would like to start with my last question for you to elaborate on before we go into the Q&A section. it's for each of you, and I prefer if you can each answer it for yourselves. If you have the opportunity now to invest 100 million euro in the digital infrastructure in 2021, in which country area would you do it? In which part of the digital infrastructure would you do it? And maybe in Nigel's case, would it even be in Europe? Who wants to start with this?
Oh, do you want me to start again?
Yeah, go ahead.
Well, you said you'd ask me the difficult ones. Well, I mean, the firstly, and I'll try to be brief. Firstly, it depends on your investor, i.e., where they're happy. So I could go to our panel investors, say, who's happy in investing in Navi Mumbai? 3 of them will say, no, we've never done a deal there and we're not doing a deal there. Whereas one of them could say, yeah, Navi Mumbai, absolutely, growing market, huge demand, let's do it. So that would be my first question to my investment committee, to say, where do you have appetite for risk or not? But me personally, looking at if I had that 100 million, certainly the secondary markets. Yes, we are investing in, of course, the main markets, but secondary where there's no competition, that's where we're piling into, because we're going to be the first group into that market and first group that will be developing. So for me, Asia would be Vietnam, Philippines, Taiwan. Over here would be Lisbon, Barcelona, for example, Warsaw, Poland, and perhaps take up Peter's opportunity of going up to Russia with him.
Yeah.
It's a deal. It's a deal.
Yeah.
Well, Peter, what would be your ideal situation if you have 100 million?
So, again, thinking about what Nigel said, yeah, you look at the competitive landscape and where there is opportunity. Yeah, you probably don't want to go head to head with the big boys where they're now. So I think, yeah, Moscow would be on my list. I would probably also go a little bit more south into countries like Nigeria, where you have very soon a 200 million population that is crying for infrastructure. So depends on your risk profile, but I think Africa definitely is a place where we will see development happening.
You can do the site search in Somalia. I won't be.
And Arnoud, what would you do?
I would definitely keep it closer to home. Markets I know better, at least, and as a banker, spread risk. So I would divide it over the second-tier markets, maybe 50-50 into the Nordics and the DACH regions, the regions I love and cover.
Okay.
We'll make more money, that's for sure.
Yeah, that's true.
And Mark, last.
Well, just for the sake of saying something different to the other panel members, you did say digital infrastructure, and so I think, given some of the interesting conversations we've been having over the last sort of 6-12 months or so, I would look at base station infrastructure for 5G rollout. I think a lot of the investors who are investing in the data center sector already, or are looking at networks and base station businesses anyway. But I think we're going to see a huge demand for need for that type of infrastructure as 5G rolls out across Europe.
Okay, thank you. We have received quite some questions, and unfortunately, I see that we don't have that much time. So I'm gonna pick out one which I'm pretty interested in, and I don't know who wants to answer the question. With the move to hyperscalers that we see right now, we all move into the cloud. Is there still a market for the traditional data center players in each country?
Well, look, I think given our repeated reference to hyperscalers during this conversation, you'd be forgiven for thinking that there's nothing beyond that
exactly.
in the data center world.
That's the question.
And yeah, it's true, hyperscalers do dominate, but there are other customers out there. I mean, within Eversheds, we informally track the type of deals that we handle. And almost 20% of the capacity that we've transacted for clients over last year, so last calendar year, whether that's on the operator side or on the end user side, was for non-hyperscale end users. So I don't see that going away anytime soon.
Yeah, you still have the traditional managed service operators, the Fujitsus, the Oracles, although of course they're a cloud player as well, the IBMs of the world, Sage, SAP, all those groups that still have their own requirements. I mean, probably one sector that has disappeared slightly is the amount of work we used to do for banks, for example, back in 2002, 2003. I haven't seen a bank requirement for a data center for years, absolute years.
Yeah, so now we're doing their sale and leaseback deals.
Yeah, well, exactly. Only sale and leaseback. So, but not actually development wise. So,
okay, guys, I have to leave it with this. Unfortunately, we have run out of time. I hope that the audience found it informative. I really would like to thank you all, and especially my panelists for joining and spreading their expertise. My name is Frank de Fremery. I was from Niellsen Data Centers. And thank you very much for joining this panel. Have a good day.
Thank you.
Thanks, Frank.
Thanks, Frank.
Cheers.
Thanks, Frank. Bye.